Hey everyone, how's it going? It's Dan Russo, the Chief Market Strategist at Chaikin Analytics, coming to you with some updated thoughts here as it relates to some of the comments that I wrote in my note today and just some of the other observations that I'm making here in the market. Wanted to talk about sentiment and the extended position of the Qs, the QQQ ETF. So sentiment and positioning have remained really optimistic, really almost excessively bullish, whether we're looking at the CBOE equity put call ratio, or we're looking at commitment of traders data, which was massively short. The large and small specs were massively short at the bottom in March, and they stayed short through much of the early stages of the rally. And then when the shorts started to cover, when the S&P 500 closed back above its 200-day moving average, that helped propel the next leg of the rally up to the February highs and ultimately through it. And we were writing about that all along the way when I started introducing that data into my sentiment and positioning work that's in my note every Wednesday. So that remains the case. So I get a lot of questions, well, what does this mean? How do you use it? And to me, it speaks to an environment. It's not a good timing tool. It's kind of like valuation, in my opinion. Stocks can be expensive or they can be cheap. But that's not necessarily a reason to take action. It kind of defines the type of environment you're in. You're either in an environment where stocks are expensive or cheap, and then what you need is some sort of catalyst to make people wake up to the fact that, hey, stocks are too expensive, or hey, stocks are too cheap. I think of sentiment the same way. Everybody seems to be bullish right now. I don't think that that's up for debate. You can see it in options positioning, you can see it in some of the sentiment surveys, and you can certainly see it in the data from the commitment of traders reports. And so nobody's denying the fact that people are bullish, and they've been rightly bullish. The market's in an uptrend, SPY and Qs at all-time highs. But it's just something to me to be aware of. So how do you utilize this data? You become aware of it, number one. I write about it every Wednesday. There are various ways that you can get a gauge of what is sentiment and what is positioning in the marketplace at the current time. And so what I like to do is say, okay, if the market were to roll over, how much can positioning and sentiment be an accelerant to a move to the downside? And I think that's the situation we're in. Should the S&P 500 break back below those February highs, there's kind of dry tinder there, if you will, or dry powder there for the move to accelerate to the downside because nobody's protected. You can see it in the options market, you can see it in spec positioning, you can see it in the sentiment surveys. It seems that people are not protected against a move to the downside. So should price begin to roll over and break, that could be an accelerant as people then scramble to put on protection. So that's what I'm thinking about today. Remaining bullish on the market from a trend perspective as we have been, but being mindful of the environment so that when stocks do begin to roll over, or if they begin to roll over, we're not scrambling. We're already thinking about it. We've already thought it through. So that's what's going through my head today. I just wanted to share it with you. Hope everybody's having a great Wednesday. We'll be back with you soon. Be well, be safe.